So introduction to Forex. Probably you clicked on this video because you want to learn how to trade Forex. And in this video, I will give you the simplest explanation and get you started on trading Forex immediately, like SIP, ASAP. Alright, so first let's talk about Forex. What is Forex? What is Forex? So Forex is an abbreviation for foreign exchange. You know, we talk about exchanging dollar to your local currency. If you are from any part of the world, just convert dollar to your currency. You have carried out what we call Forex, alright? This type of Forex, which is like the exchange of dollar to your local currency, is different entirely from what we are going to be talking about today. So what we are going to be talking about today is the online CFD Forex trading. So I know you've heard about Forex. Everybody have described it as exchange of one currency to another. But you go ahead and be like, where is the physical money that they are changing? You see, they are not changing anything. So what this online CFD Forex trading means is that you just trade price speculation, like the prediction of price. You predict that price is going to increase from this amount to this amount. So let's just say you want to buy a particular pair, and you predict that it's going to move from $1 to $2 for you to make profit, and you say it's going to sell, you expect it to sell from $2 down to $1, so you make profit. You are just trading price speculation, just the movement of price. You are predicting. That's what we mean on the online CFD Forex trading. Alright, so remember that this one, just Forex, is different. The main one everybody trades online to make money is this CFD Forex trading. Alright, and we can't talk about Forex without talking about broker. So that's the next topic. Alright, so broker, let's go on. Broker. So what is broker? Broker is like bank. Alright, I will use bank, the terms bank, to explain. So broker is like broker is like bank. They give you access to the market. Alright, they give you access to the market to be able to trade this financial market Forex. That's the online CFD Forex trading. Now without broker, you can't trade the financial market. You can't trade this Forex, this online trading. You can't do it. So what these people do is that they are the bank in the Forex trading, and you have to open an account with a Forex broker. So the recommended broker is Vantage Market. Link is on the description of this video as well. You can register and get started. And when registering, alright, just make sure when you get to the signing up side, you'll be asked a promotional code. Put Fxctradepad, the word you see here on this YouTube, capital letter Fxctradepad, there to receive 500 first deposit bonus. That's just an offer for you to cash out on. Now, what you do with this broker is that this broker, after signing up, you will sign up with your credentials. You have to put your real name and a valid ID card to verify that you are actually the owner of the name and the terms that you decide to sign up with. Alright, fill out everything correctly and you have a broker account. Now with your broker account, you will be able now to trade Forex. When we get to the apps we use on trading Forex, that's where you will now sign in the account provided to you by the broker to be able to now trade Forex. Now we are done with this, we are going to move over to the next topic. Stay tuned. Before we get into the platforms that we use to trade Forex, we have to discuss what we trade in the Forex market, because you can't just download the app and start using without knowing what to trade in the Forex market. What to trade in the Forex market? We have so many things, beyond your reasonable doubt is being traded in the Forex market. We trade US oil, we trade cocoa, we trade some things that you don't even know that is crude oil. Yeah, I know it's sounding weird, but yeah, we trade it here on Forex. So there are so many things, but I'm just going to, like I said, give you direct what you need. So we have something called currency pairs. I will explain it. And we have commodity, we have crypto, we have stock. But in all these things that I mentioned, I will just pick the ones that we actively trade, that you are going to trade and have no problem. Alright, stay away from confusion, which is just the currency pairs. Inside the currency pair, there are ones that we trade and the ones that we don't trade, and then commodity, and then crypto. These are the three ones that we trade. So let me give you an example. On the currency pairs, we have major, minor, exotic. These are the three groups, and inside this group we'll now have multiple pairs. And you might be hearing me say pairs. What does pair mean? You know, from the word pair, it means two things are being put together, right? And that's how we trade Forex. For you to trade anything in Forex, it must have two components inside of it. So for an example, the one that we are all familiar with, which let me just use something that is very basic. Let's say US dollar and euro. So euro, US dollar are being matched together and it gives us one price, and that one price is what is going up and down. It's just the merge of the two of them. That's what we call pair, the merge of two different currencies together. So now we will give a definition of all this, and now point the one that we trade and the one we don't trade. So what is major? Major currency. Major currencies are we have few currencies recognized all over the world. There is no way in the world that you go with US dollar, they won't recognize it as a legal tender, alright? And there is no way you go in the world with euro, they won't recognize it. But for an example, me from Africa, I can't go to Kenya or even some African country with my naira as a legal tender. Nobody knows what it is. But if I go with dollar, everybody knows what it is. So currencies like that is what we have as major currency. So I will list them on your screen. These are what we have as the major currencies. All right, you can take a screenshot and write it down. Minor currencies. Now, when we get to minor currencies, you will notice that these pairs are matched together without input of US dollar, but they are still part of the major currencies, but without US dollar. All right, and then when we now talk about exotic is one of the major currencies recognized all over the world with one that is not recognized all over the world. So for an example, let's say dollar Ghana cedis, dollar naira, dollar Kuwait money, dollar, all these currencies that are not known all over the world. That is what we mean as exotic pairs. So we don't trade this, and we'll trade this and this. But for me, my own recommendation to you is to just pay attention to these two and forget about this one. All right. Now, on commodities are things that are not legal tender but has value. All right. So what are these things? For an example, I'm just going to list two: gold, oil. So we have it as US oil. So these two stuffs here, gold and US oil, are commodities. All right. I think back in the days people used gold as, let's just talk about that, but people use gold as legal tender there. So gold, which is the normal gold you will wear, but the price, that's what you are trading. And then US oil is like crude oil. The price of crude oil per barrel is going up and down, it's always moving, and that's what we have as commodity. All right, for me, I trade this. If you join my live stream here on YouTube, I trade gold always. I even trade US oil. Cryptocurrency. So we trade a whole lot of crypto, like a whole lot. There are different types, but the main one I'm going to use as an example is BTC. So Bitcoin. All right. So we have this. This is the new currency now, the digital currency all over the world. This is part of what we trade. There are so many different types. Binance Coin, Link, like so many. You guys name it, Dodge, so many things. But just know that cryptocurrencies are part of what is tradable in the Forex market. What pairs I recommend you start with? So pairs I recommend you to start with is just Euro USD. This is the abbreviation, Euro USD. That's the pair I recommend you start with. Very simple. So one more important thing before we jump into the platforms we use to trade Forex. This is very, very important. So basically, is one component that you will be seeing for the rest of your life once you start trading Forex, and it's candlestick. 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 So candlestick is what we use to represent price movement, like as the price is moving up and down and the state is always moving. This is what we use to pinpoint where price has gotten to as a representation on the chart. So we have it as candlestick, and I will show you on the screen what this candlestick looks like. So let me now draw and explain to you what it is so that you will understand what it is. All right, so for an example, this is what you will see as candlestick, and I will label it. All right, so this is wick, this is body, some call it candle body, this is also wick. All right, this is just like the basic explanation of what this candle means. So now we might be wondering, okay, if this is the whole thing, what does this now mean? So we have two types of this candlestick. We have the bullish candlestick, that is the one that is for buy, and we have the one that is for sell. All right, so let's go ahead. We have the buy candle, we have the buy candle, which they can call bullish, and we have the bearish. So these are the two types of candlesticks that we have, the bullish and the bearish. So I'm going to clean this off to now draw the bullish and the bearish candle illustration. All right, so for the bullish, for the bearish, so let's get down to the labeling. So on the labeling, one thing you need to understand is that you already know what this is, right? Yes, you are correct, wick. You already know what this is, right? Body. You already know what this is, wick. So the same thing applies to this, wick, body, wick. All right, you know all these things. Now let's get to the deeper explanation of what's actually going on here so that you'll be able to differentiate the bullish candle and the bearish candle. So on the bullish candle, price opens from below. Price opens from the low. So this is where it opens, and price closes at the top. Close. Now, on bearish candle, price opens from the top and closes where? Below, at the bottom. All right? So this is the difference. This is the difference. This is the difference between bullish and bearish candle. Remember, this is body. This is wick. This is also wick. Alright, but the most important is that price opens from below on the bullish candle and closes above, and from the bearish candle, price opens from the top and closes below. So now you might not be asking me, okay, what is this precisely, because you've seen it on the screen right now, candlestick. You see how everything is now. Now you now be asking me, what does this really do? So let me explain more deeper. So explaining candlestick more deeper right now is that, let's assume this side is the price. This is what you always see on the platform I will be introducing you to. So let's say this is about 50, price 50. Let's say this is about price 40. All right, let's say this is about price 40. This is about price 30, price 20, 10. So we can say this is $10, $20. This is price. And let's say what we are trading here, this pair is Euro USD. This is Euro USD. So if we're trading Euro USD, for an example, let's say we have one long candle. what happened here? If this price is a bullish candle, price opened at, let's say, about $15. That's where price opened. And when price opened at $15, it actually came down to almost $10 before rejecting. So what does weak looks like? What is really weak? Weak is the lowest part or the highest part the price got to before rejecting. So market actually got to $10 before it rejected and then started going up. And when it got up, this candle week also got to more than $50 before it actually pulled back and then closed here. Do you get it right now? So this body is showing you the full direction it went and closed, but wick is showing you where it got to and rejected. All right. So this is just the explanation of how candle moves, and you'll be seeing this thing steady over and over again. So now we are done with the candlestick. Let's now talk about the platforms that we need to use and start trading our forex. Let's go. I'm so excited. Platforms to use in forex trading. So platform we use, we have 4 platforms that we use. So I'll be listing them one after the other. All right. So we'll use what we'll call MetaTrader 5. We have MetaTrader 4, but the one we'll be focusing on is MetaTrader 5, which is the latest version, and it makes more sense, very easy to use. So we'll be talking about MetaTrader 5. So MetaTrader 5 is where you will now log in the account provided to you by the Forex broker, all right? That's where you will now log in this account. Now, when you log into this account to the Meta 5, that's where you will now be able to place your buy and sell and make your profits, all right? That's the trading platform for you to be able to improve this thing. So you can download these apps on your Google Play Store, you can download it on your Apple Play Store, and you have it there, all right? But remember, you need a broker account to now sign into this. And there will also be a video showing you how to sign in the Forex broker account into your MetaTrader 5. So you can watch that as well when you get to that stage. So the next one is TradingView. So on TradingView is where we make analysis. You get familiar to this because you need it for analysis. Analysis is like analyzing the charts to now see the direction of the market. If you join my live stream every 7:30 a.m. in the morning, Monday, Tuesday, Wednesday, Thursday, Friday, you always see me make my analysis, and the platform I use is TradingView. So that's where I draw to get my signal if market is going to buy before I will now go to the MT5 to place my trade. So this has an app, but you can analyze on your phone, so you need a laptop, and you can sign into their website www.tradingview.com, create an account, and you will have access to TradingView. Link is also on the description if you want to sign up with the TradingView and get started. All right. The next one we have is Vantage Market app. So Vantage Market app is the app belonging to the broker I recommended you in the beginning of this video. So this Vantage Market app is a quick way into, instead of going to the www.vantagemarket website all the time, you will use the app and log in your details after you've created an account on the website. All right, you will now log into that app. When you log into that app, you can now be able to see where you can deposit, withdraw, because you'll be making a transaction, so you need this app to keep you in touch with your broker. And they have some bonuses, some offers that you can check out the app by yourself, and so you can download it on Play Store and on Apple Store as well. Now the next one we have is Forex Factory. So what's Forex Factory? Forex Factory basically is a news platform, all right? It's a website, www.forexfactory.com. So that's where you see the news that will affect a particular currency, all right? These are where we drop financial news, like Forex drops financial news, because we have something like US unemployment, for an example, maybe their rate cut, like some important financial news that drops in country. You always see it on Forex Factory to help you stay aware of how market volatility will increase when this news drop. And when this news drop, the market moves massively, meaning you can make massive money and also lose massive money when you don't trade without caution. So be very, very conscious about it as well. These are the 4 important platforms every forex traders use. Very, very important. So lock in. Let's move to the next one. Get familiar with these terms. Now these terms I'm about to write are very, very important. So let's get it. First one is leverage. So I'm going to write and explain leverage. So what is leverage? Now when you are opening a forex broker account with the one I recommended to you, there is a place where after inputting your IDs to now create accounts, you will see something that will say leverage. It comes with, let me give you an example, 1 to 100, 1 to 200, 1 to 500, 1 to 1000. Some even have unlimited, alright? But these are the most basic one that you will see. So the one I want you to select is this. Select this one. This one is the recommended one. This is the recommended one. Don't go for anything higher than this, alright? So what this leverage means is part of the buying and selling power broker gives to you. You know, when you come into the market with, let's say, $100 and you want to do exchange of, you want to give $100 and get €100, that if the price increase, you will sell it and make money. Now, when you do that type of conversation in the forex market, you are making off, let's say, $1 profit. Is that what you'll be doing? All right. So what this leverage means is that leverage gives you a more buying power, like a borrowed money. So they will magnify the money in your account, make it big to have the volume that once markets make a little move, you will have profits. All right. So what it means is that if you have about $100 in your account and you select this one, they are going to multiply it to 100 times the buying power. And what it means is that if you increase it, they're going to multiply it to 200% times of what it is. Like very, very big. This thing is very, very big. Imagine, let's say your money now times 100. That's giving you a big buying power. Increasing it times 200 is giving you big power. Increase whatever money you have times 500, it's giving you big power. So that's what leverage is. Very, very simple and, understandable. Now, the next thing I have on my board is ask and bid price. So ask price and bid price. Now these are the 2 terms that you will see more. You might not be seeing it more, but it's always there, so you need to know about it. So what this ask and bid price is, bid price is the price a seller is willing to sell from. All right, and bid price is the price a buyer is willing to buy from. So I can call it seller's price and buyer's price. So these 2 things, you always see it. You will always see it on your trading platform, Meta5 for an example. So you see this tiny line here, these 2 tiny line here that is always moving up and down. That is the bid and the ask price. And which one out of this is the bid and the ask price? So the bid is the one at the top. That's the bid. And the one below is ask. So what this bid and ask price, this is where broker make their money, all right? This is where they input their own charge because they are bank, they have to be making money, right? So the space between this and this is called spread. That's where we got another word called spread. Now we'll explain what spread is and you'll be shocked. So what is spread? Spread is the difference between bid and ask price. All right, the difference, that space between the bid and the ask price is what we have as spread, and this is where broker makes their money. So meaning that once you open price, this spread, once you take a trade, maybe buy or sell, this space is where you will now make your buy and sell. And that gap, let's say you make a sell at this point, all right, the one at the bottom is ask and the one at the top is bid. All right, so let's say you take a sell here. Now these 2 gap, we have to move below that line, below the line that you make the buy, you make the sell, So let's say this is the line you make the sell. So these two lines has to move below it before you be in profit. So the moment you open price, you are in loss. Like you are in loss. So price has to move below that line before you start making money. So that's where they put their commission. So that first loss you see on your MetaTrader 5 once you place the trade is bid and ask price difference spread. That's where broker makes their money, right? So the next thing we are going to talk about is swap fee. So what is swap fee? So let's say you place a trade today and you held that trade over to the next day. A fee will be charged to you. It's very tiny, don't worry. Very, very tiny. You won't even notice, like cents, few cents, all right? Depending on how many lot size you open. So this swap fee is the price you pay for holding trade over. So now that we are done with this, the next thing we are going to talk about is the 4 components that you need to know before you can even trade. If you don't know any of, I've said it multiple times. I know you'll be surprised to hear it again. But if you don't know about these 4 things, you won't be able to trade Forex. So stay tuned. Let's get to it. So let's talk about trading terms. Now these are the words we use as traders more often. All right. So the number 1 is buy, sell. Number 2. Number 3 is take profit. Which they abbreviate to TP. Number 4 is stop loss, which is abbreviated to SL. Alright, so let me just quickly explain. So buy, another word for buy is go long or long. Another word for sell is short. Alright, so what does this buy and sell mean? That's what we do in the Forex market. You are buying and selling to make profit, and you are just predicting that the price will go up, and that's what we mean is buy. And you predict that the price will go down. That's what you mean by sell. As simple as that. Alright, take profit. What is take profit? So let's say you open price at $1 and you say that this price is going to go to $2. That's where you put your take profit. Once price gets to that place, it closes you automatically out of the market and you've made your profit. So that's what we have as take profit. Then stop loss. So let's say you predict the market that is going to buy from $1. Instead of this thing buying, it keep dropping, and now it dropped down to, let's say, 50 cents. It dropped below $1. So once it dropped below $1, when you put your stop loss on the 50 cents, it will close you automatically in loss to short, the wideness of your loss. You don't want to lose all your money in your trading account. So these two, very, very important. So we'll move to the next thing, what you must know before you place your first trade. All right, let's get to that. So before you take your first trade, you must get familiar with this. Pips. What is pips? Pips is the measurement unit for price. The price is always moving. So this is what they use to measure, so they will be able to calculate your profit. All right. So that's what pips is. And these pips, don't worry, because so many mathematics, you don't need to learn how to calculate it manually. TradingView will do it for you automatically. So if you want to find out how to find this pip, TradingView calculates pips for you automatically. You don't have to bother about that, all right? Now, the next we have is going to be lot size. So what is lot size? Lot size is the amount you are willing to buy or sell when you are not trading the Forex market. So when you look at this lot size, we have different sizes. That's why they call it lot size. When you hear the lot size, you will still hear size on it, showing you that it's all about measurement. So how many you are willing to buy. So I'll be showing you the types that we have. And I'll also recommend the one that you should be using. We have standard, we have mini, we have micro. So we have standard, mini, micro. And all these things are the types of lot size that we have. So standard lot size is 1, all right? Mini lot size is anything less than 1. So we're talking about 0.99, all right? This is what we mean by mini. And this thing runs to 0.1, all right? So Mini runs from 0.99 to 0.10. And then micro runs from 0.09 down to 0.01. So these are the type of lot size. Remember, standard is till infinity. Till infinity, we can have 200 lot size, 5,000 lot size, and all those things. So these are the types. So we have standard, mini, micro. So the recommended one I would recommend you use, especially when you are starting, is micro. Start with micro, recommended, all right? Until you now understand everything, where you can now increase to mini and even standard as well. All right, so let's dive down to the next thing we have. And now the next thing I'm going to talk about is the reason why PEEP and lot size goes together. They go together. You can't trade Forex without understanding PEEP, and you can't trade Forex without understanding lot size. These two things work together. It is from the lot size measurements that you'll be able to know how many lot size you will open. All right, so two of them work together, and that's what I'll be showing you on the board how to do right now. Now, before we explain how PEEP and lot size work together, let's also look at the value of lot size per PEEP. Instead of saying you're using micro lot size, you know how much the thing is charging before you even start doing anything. So let's get to that. Value of lot size per PEEP, yeah? So values of lot size per PEEP. You already know that one is standard lot, all right? I'm testing your knowledge now. So you already know what this one is. This is mini, all right? This is mini. And then you already know what this one is, all right? This one is micro, all right? So standard of using short words, mini, micro, all right? Mini, standard. For every one lot size you open is equivalent to $10. Is equivalent to $10 per PEEP. For every 0.99, so it's equivalent to 9.99 cents. And then this last one too here, that is 0.10 lot, is equivalent to $1 per PEEP. For mini lot size, that is 0.99 to 0.10 is equivalent to 9.99 cents and $1 per PEEP. All right. So for micro lots, we have 0.09 lots and 0.01 lots, the equivalent to 90 cents and 10 cents. So for every 0.01 lot that you open, markets will be charging you or making for you 10 cents per PEEP movement. So 10 cents per PEEP movement. So for you to make $1 of this, how many PEEPs have to be in profit? You have to make 10 PEEPs profit to make $1. Before you can make $1, 10 PEEPs in profit before you can make $1. So now you can understand, you've seen the value of the lot size per PEEP. Now the next thing we're going to now dive in is how this lot size and PEEP go together. We've already done one of it here. So I'll clean the board and just give you a quick example, all right? PEEPs and lot size goes together, all of them, the two of them goes together, always. So just like I gave you an example from that previous example, that 0.01 lot is going to be giving you 10 cents per PEEP. All right? So you already know that the value of this per PEEP is 10 cents. So for you to make $1 profit, you need to target 10 PEEPs. Because with 10 PEEPs, you know it's going to be equivalent to what? $1. You see how the two of them are moving together. So that's why you need to understand the lot size how to pick the lot size, and also understand these pips that will be on the trading view explanation, how you can now be able to target the amount of money you make. So the higher it goes, the higher the money gain becomes. So for an example, let's talk about mini lot size. So which mini lot size would I use now? So let's say 0.50. So 0.50 is mini lot size. For every 0.50 is equivalent to $5. $5 per pip. So for market to move 10 pips in profits, you are making what? $50. That's what you are making. So you can see the higher the lot size you choose, the higher the money you make, and the lesser the lot size you pick, the smaller the money you make. And this all depends on your account size. If you have little money, that's why you need to start with micro. Start with these little ones, all right, so you won't end up losing your whole money. All right, now we are done with the basics of forex trading. So now with these things, you can be able to start your forex trading journey, but there will be more videos down to explain more deeper how to use MT5, forex factory, and trading view, and some other things that you need before you start executing your first trade, which is very important, that MT5. So lock in. Now if you now want to learn how to trade, you know what to do. Link is on the description. You can message me for one-on-one mentorship. And as well, I'm always live streaming on this YouTube channel every 7:30 a.m. in the morning. We also have an active Telegram channel group where you can join and receive free signals and any other market updates and make money even without learning how to analyze the market. But if you want to learn how to analyze the market, reach out to me for one-on-one mentorship. Thank you for watching, and subscribe and hit the like button for more amazing content like this. Welcome to Forex Trading, and welcome to Fxctradepad. Doing it again and again, running digits up. Alright, peace out.